Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, November 30th, 2012. And what I'd like to do in this video is pretty much a follow-up to the September 16th global stock market overview that I did. I did a video back then detailing, going over the daily and weekly charts, both the U.S. and some of the key European indices. And I'd like to go ahead and do a follow-up to that today, take a look at what's happened since then, where we're at today, and most likely where we're going to go from here. So let's start out with the S&P. In fact, let's go back to the I'll compare to the 9/16th video. This one was very timely. This video was done, as I said, on September 16th. That was a Sunday. The markets actually topped that Friday. I think it was the 14th. So the timing of this video was very good. And for those of you that took advantage of the move we've had down since, did pretty well. And now the tough part is where do we go from here? Because we're all only as good as our last trade. So let's try to figure this out. So let's take a look. This is the weekly chart of the S&P 500 back then, from taken on 9/16, and I talked a lot about the wedge overthrow here in a lot of the U.S. indices. We had these overthrows of these rising wedge patterns with negative divergences in place below, and I talked about how almost always, at least more often than not, those negative divergences tend to play out, especially when we come across those on the weekly time frames in conjunction with bearish patterns like rising wedges. And of course, if we take a look at what's happened since, I'll put the horizontal line. We can zoom in a bit here. This is when that video was taken, and as you can see, as we all know, we had a considerable move down from that point. Now, again, where are we at today and where are we going? I've added, I have this trend line here. This is a primary uptrend line off the 2009 lows that defines this yellow rising wedge pattern. And as you can see, especially if we zoom in, prices are right there, right up against the wedge pattern. Of course, there's a little give and take. You can come in and out a little bit. These candlesticks tend to overshoot as you look down here. Most importantly, we like to see a close on or below the trend line here to keep this pattern intact. But so far, from a technical perspective, what we have here is a breakdown of a very long-term, multi-year trend line. In fact, the trend line that so far defined the entire bull market since the 2009 lows. And so we have that breakdown and nothing but a retest at this point. Can prices get back within that wedge? Certainly. Can they continue to retest higher for a while, crawl along the underside of the wedge? That's a possibility as well. But either way, that's where we're at today. And most importantly, I talked a lot about this, the prices, the bullish breakout to new highs that occurred at this level. We took out the previous reaction high here. We had another reaction high all the way back here, which was the first big push up in the last bear market. So this horizontal line that's highlighted here was a key level. We took that out. At the time, even as it was being taken out, I talked on that, although technically, from a technical perspective, that is a bullish move, but I suspected that we would fall back below there and it would prove to be a bull trap, falling back below the breakout level, which so far it has been. And again, if you look at that horizontal line, again, the one that's highlighted here, we are still below that level. So as long as the markets remain under this level, to me that is overall bearish, because we're still in the early stages of what appears to be a nice bull trap here. And again, I talk a lot about these divergences, and longer term I think that has bearish implications unless we were to considerably move above these recent peak highs and burn through these negative divergences. In other words, have the MACD turn back up, the RSI take out these downtrend lines. Let's show you here. So if the RSI were to come up past these trend lines here, as well as the MACD, that would pretty much tell me that these divergences have been negated. And let's go ahead and take a look at the daily chart. This was the highs were back here, And that's when the videos were done, and this was the subsequent price action. Most of you who've been following the site recall I was tracking primarily the Qs on the move down. I was putting a lot of focus into Apple and the QQQs, and we hit the third target level I had there, as well as my primary first target on Apple, and that's when the market's put in a nice bounce. And so the bounce so far has been nothing but an expected oversold bounce off resistance, and I'm still viewing these two lines here are the support zone that I've recently showed on the SPY, and I'm looking at this as a likely stopping point for this rally somewhere. If you want to put that in S&P 500 terms, 1425 or so is about the top of that zone. Currently we're struggling with the bottom of the zone. Where we turn down, I don't know. So that zone runs from about 1420 to 1425, and of course if we get up above the top of that zone, depending on the market action at the time, we'll just have to assess things as they go, and that will likely be an area where I'll begin to reduce short exposure, maybe take some long hedges if we convincingly punch up through there. So again, that's the daily chart, and let's compare this to the previous daily chart. That's where we were at that point in time when I did the video here. I talked about strong divergences in place, the wedge overshoot, and once again from there we dropped all the way down and had that nice move down, and now this is a point where I'm reloading on the shorts. Pretty aggressively short at this point. My plan was to scale in back into the shorts pretty aggressively this week, which I've done up to this point, and from here I will sit tight and see what happens from here. Ideally I'd like to see some impulsive selling start to kick in soon. And by impulsive I mean strong, strong down candlestick, a strong close. Would be great to see it today as I speak. The Dow and S&P are in positive territory. The NASDAQ's just slightly down. So overall a green day, and it would be a red close today would really help strengthen the bearish case. But again, we'll need to see more follow-up. We know the markets are overbought in the short term. There's no doubt about that. So I think even those who are bullish longer term acknowledge that we do need to see at least a pullback or a pause to reset some of these short-term overbought conditions. Okay, this is the NASDAQ Composite Weekly Chart. This is the static screenshot I took from the 916 video. This is where we were. I had talked about this recent breakout to new highs here, but the fact that we were in this rising wedge pattern, this chart's a little more clean and not as many lines here, and as you can see, we had the negative divergences in place, especially down here on the RSI, and let's compare that where we're at today with the comp. Again, weekly chart. Okay, this is the same wedge pattern, the white lines that I was looking at here. I did add this yellow longer term uptrend line, but as you can see, we've broken below that, a solid impulsive breakdown. Those large red candlesticks help confirm the validity of that wedge and the fact it was a breakdown. When you see that impulsive selling, these negative divergences persist, and again, as I've spoke on a lot in the past, these divergences go back. These are 2-year divergences, multi-year divergences, and in my opinion those divergences will ultimately play out more downside. Whether we go up from here, that's very possible. We can go back up, as I said, test close to. I really wouldn't want to see prices go above this line, but that is a possibility that we continue to move back up and maybe back test this trend line, walk all the way up into late December, early January. If we start to get above here or well inside this wedge and see these divergences burn through, then I will obviously be second guessing my overall bearish view and might be moving to a more bullish outlook at that time. Okay, going a little shorter term, this is the NASDAQ Composite as well. This is the screenshot back from September 16th when we were showed the strong negative divergences here, clear divergences both on the MACD and RSI on the daily chart. That's where we were then, and this is what's happened since. horizontal line marks the 916 level, or 914. Video was done again over the weekend, and so this is what we've seen since. We had that nice move down, and looking in the shorter term, these lines here, and I could add some other lines in between here. There's quite a bit of resistance for the NASDAQ to overcome. Next level, that's a very solid level right here, call it the 3040 level on the NASDAQ. So again, in my opinion, if we are going to turn down, that could happen from any point from here on out. We can turn down today, the red close today, or we can very well continue through moving up into the next few weeks here, possibly into January, and still keep this longer term bearish scenario intact. Okay, now let's roll into the European indices, and we're looking at the Frankfurt DAX here. This is again back from the 916 video. I talked a lot about this pattern here, this large triangle type pattern. Very long-term trend line. We're looking again at a weekly chart that goes all the way back to 2007. We have multiple touches on here, and at that point I had mentioned this would be very formidable resistance, and I expected the markets to turn down. And now let's fast forward until today, and it's just amazing when I look at this. Again, this is the same trend line. If we zoom in here, we're talking nearly 3 months of bouncing each and every month. These are weekly candlesticks, but nearly each and every one tagging the top, having a pullback. We did get a pretty decent pullback there finally, and prices are once again challenging that. So over 3 months of rejection as the DAX has tried to break above this trend line. So these are key levels. So for those bullish, if we take this out with conviction, we do have some horizontal resistance not too far overhead. I could see another fake out like we did recently in the US markets, where some of these European indices break out, take out these downtrend lines, move up for a couple days, couple weeks, and then fall back below. However, it's really hard to say. Looking at these charts, anything is possible, and you'll have to respect a breakout to the upside on these markets as a bullish event until we see that reversal. So I do want to point this out. One can take this as the glass half full. I'm looking for a breakout and a considerable move higher. As someone who's more of the bearish persuasion right now might say, well, I like to short resistance and expecting a pullback, and that's the case I'm looking at now, largely in part on really focusing on the U.S. markets. I trade the U.S. markets primarily, and but this is something to watch, because I doubt we'll see the European markets break out and just run off to new highs and the U.S. stock market head down lower. That's very unlikely, so I try to keep everything in perspective. So that was the DAX. And now we're looking at the London FTSE. Similar story, almost an identical downtrend line going also back to 2007, early 2007, maybe even late 2006. Multi-year, the white downtrend line here. I had pointed that out, that we were up against that downtrend line, as well as this blue downtrend line. Might be hard to see here in the video. I'll jump ahead. Let's take a look at the current weekly chart on the DAX. And we'll zoom in a bit here. As you can see, we were back, let's see, September. Okay, it was back right here at the first tag of that downtrend line. And just like the DAX, we have done nothing but bounce against the underside of this downtrend line since. Had a pretty impulsive pullback here, and equally as impulsive move to the upside, and we are once again just under that key resistance level. So if you see here, I do have this blue, try to highlight it here very hard since I have so many trend lines. We have a trend line off these more recent highs, and then the longer term trend line. They both come in around the same area. So either way, respect a break over that level, and we do have this horizontal resistance level, which are the recent highs back here in late 2010, early 2011, as well as some other resistance that goes back for a few years. This is a pretty significant level. So again, I could easily see a false breakout, a breakout that takes the European indices above these downtrend lines and then runs up to challenge this horizontal support or their recent highs, and then turns down. Of course, it could break out as well, but something to keep an eye on. And finally, the Paris CAC 40. This was the original chart from the video back on 9/16. At the time, I had pointed out that of all the European indices, this one had taken out just slightly the key downtrend lines. However, this has I had mentioned, a very significant horizontal support level, a lot like the DAX and FTSE have just above, but the Paris CAC was already up against that level. As you can see here, look at these reactions. One there, and an impulsive move here once it was broken. You see quite a few candlestick bodies and tails and wicks on that. So a key level, that was again nearly 3 months ago, and let's take a look at where we're at today. We've gone literally nowhere in that amount of time. This was back then on the 16th, and prices pulled back, have struggled with it, have just recently come again, taken out this this downtrend line here. I may have modified this, dragged this downtrend line off ever so slightly. Either way, this is the key level. This level, for those of you that trade the foreign indices, 3610 looks like that key level on the Paris CAC. Okay, and to try to wrap this video up again about where we're going from here, my thoughts are this: an aggressive trader, might want to go ahead and initiate some shorts here if you think there'll be some more downside. That's my current bias. Anybody who was able to catch this move with me along on the downside, we had shorts up here. We did start to scale in a little early around this level, but we caught the entire move down and closed most of those out right here, literally, to the penny on the bottom, or within minutes or hours. As I personally advised, I hedged up. I went to mostly cash because I was away for the Thanksgiving week, and so I didn't profit a whole lot on this move up, but at least I was able to lock in a lot of my profits, and since then I've been scaling in short. And as far as how much further we might bounce, this is the QQQ. You can see, if you look on the left-hand side here, these are the Fibonacci retracements from the move all the way from the peak down to the lows, and I could easily see this move going up. This is a 61.8 level here. Can it go higher? Sure. Sometimes retracements go all the way up, but ideally I'd like to see it stay below that 61.8 fib. Currently the QQQ is struggling with this 50% fib line. I might have to zoom in here a little bit for everyone to see, but this is the 50% fib here. We're struggling. And right above that, where we stopped the other day, here's a nice resistance level. So, that's somewhere, ideally, for the bearish scenario to be alive and well. I would like to see prices turn down here soon. However, as I mentioned, we could drift higher for the next few weeks. And, as long as we don't take out these recent highs and everything that I talked a minute ago on the weekly charts as far as the divergences, we want to keep those intact. Let's take a look at the SPY. I did talk on the SPX a little bit. It's the same resistance zone that I showed there, but this is a resistance zone that I'd really like to see us stay below or turn back down on soon. And so far for the last couple days, we have struggled right at the bottom of that resistance zone. So again, my ideal scenario would be to turn down here or no later than the top of this resistance zone. And if we do get above that level, at that point, I'll do an update at the time. I take a lot of things into consideration, market action, breadth, a lot of other things that I don't always cover here. And at that point, I'll talk on, do an update or maybe a static post and talk on some strategies, because I personally am very aggressively short at this point. And so if we do get over this level, I'll have to consider starting to take some short exposure off, maybe add some long hedges. So. Okay, folks, hope this was helpful, and I'll try to keep the updates coming. Have a nice day.